We were part and we were listening to that press briefing that was being conducted regarding the situation in West Asia and how it impacts India. Oil and gas prices have surged higher today as markets reacted to escalating attacks on energy infrastructure across the West Asia region. Iran launched retaliatory strikes on multiple oil and gas facilities in Saudi Arabia, Kuwait, the UAE and other Gulf states following Israel's precision strike on Iran's massive South Pras gas field, now the world's largest natural gas reserve. Joining us on the phone line is Mr. M.K. Agarwal, who is an economist. Thank you so much, sir, for speaking to NewsX. We appreciate it. Sir, obviously now we are looking at a situation which is worrisome. That's what the government is also saying. We are seeing attacks on oil fields, we are seeing attacks on refineries, we are seeing attacks on production units of crude facilities. How are you looking at the economic situation, given that the government is now stating that the situation obviously is very worrisome?
Yeah, that's true, because the way Iran is reacting, and Iran was bombed on its oil installations. And similarly, Iran is attacking the Middle East countries, particularly the Saudi Arabia and other neighborhood countries. So it is worrisome globally also, because earlier it was a restricted supply of energy from this region. Now even the source is getting damaged. That will require long period to get it functional. Therefore, it is a global worry. And the warring parties must take care of it, that it is not escalating further. Rather, there is some truce coming in the way, so that global energy situation gets normal. With regard to the India's position, at least we have been able to maintain our crude supply, and government has assured that crude supply of petroleum product is being supplied smoothly in our country without any price rise. As far as LPG is concerned, this is still a matter of worry, but the domestic supply is smooth, and it may remain smooth because it is diversifying the imports from different sources. New sources are being invented so that the domestic supply of LPG is smooth, and that's why even the commercial LPG supply is being increased. And government wants that consumers are shifting away from LPG, although this type of effort was since long, but now it is given more thrust that from LPG, LNG and PNG is being taken care of. So this way we have to take care of our energy requirements, and government has been very prudent and very smart in handling the energy situation in the country, because it is a matter of 1.4 billion people. And so far there has not been any panic. Whatever panic booking was there, that has stopped almost, and therefore I believe the situation would further ease. But with regard to import, government is worrisome given the situation that is happening in the Middle East. So getting from new sources will be expensive. It may take longer time because the route is quite longer as compared to Hormuz Strait. So these are the things that is worrying the government, but government is smart to handle the situation diplomatically, economically and otherwise. So I believe the situation in India remains smooth, because we have to grow faster without much damage to our economy.
Absolutely, Mr. Agarwal. In fact, I'd request you if you can stay on with us. We are breaking some more inputs this time from the markets, where volatility has surged sharply, with India's volatility index rising over 22% to near 23 levels. The spike reflects heightened investor anxiety amid global cues and rising crude oil prices, which have weighed on overall market sentiment. Mr. Agarwal, if I can also get your observations regarding the market situation, because we've spoken about oil, we've spoken about gas, but let's also talk about how the markets are also seeing red, given the volatility index has also surged, sir.
In fact, what I find that the recent situation of bombarding the oil installations has further aggravated the situation and created the global restriction on the supply of the energy. So this is creating a type of instability around the world, and this is impacting the global market. And not only the global share market, but it is also impacting the gold and silver also. The prices of gold and silver is going down. And in fact, if you are looking at it, you will find the liquidity crisis is also emerging in several countries, particularly in the Middle East, because there is no flow of trade and there is no supply of their products, particularly the crude products. So it is leading to some type of you can say liquidity crunch, and this is impacting the global market because this is a major type of club of countries in Middle East, and if they have restricted trade and they have restricted supply of essentials, as well as they are not able to supply their product, particularly the crude products and LPG, this is causing a type of instability around the world, and this is not a good sign. And I believe the good sense prevails. And again, I would say that it is for the major economies, major countries to settle down the issue. Otherwise, it will damage, because already the prices of energy has gone up by almost 30% in European countries. Just imagine what will be the situation of inflation and about the supply of the basics. Not only energy, but also the food supply is going to be another major setback in many of the countries around the world.